What's up? What's up? How's it going? So glad to just check in with you guys and go over some of my moves for this week. We get the board together, get the whole boardroom. Just gonna get my quick steps in, and we're gonna figure out what's going on with the market this week. We're gonna figure out what's going on with the housing bubble, and then I'm gonna give you some plays for this week, next week, which ties into the most important part. Hit the link in the description for Webull. You'll get 6 free stocks. This is the best time to buy. Market tanked. I'm just getting my steps in, so this isn't a heavy duty pitch, but click that link, take 2 minutes, sign up, deposit a penny, and get 6 free stocks. Get yourself 6 free stocks in the lower end while the market's at the bottom of the bottom, so you get a good one cheap. For a penny, you get 6 of them, and I mean, in a couple of months, it's gonna be worth, who knows, 20 bucks, 30 bucks, you never know. So, without further ado, I'm gonna get right to the content that you came for. I'm just gonna get my steps in here, buzz around. Okay, housing bubble. First and foremost, I'm currently in the market for a house. Not super aggressive, but making offers here and there. So I know what it's like and what the math means with these new interest rates. So let's just say hypothetically, most markets you could get something decent for 400K entry level. That 400K mortgage is going to be about $3,000 a month at a 5% interest rate, which is baseline now. Haven't even seen 3% months. You're getting a 5% mortgage. After 3 years of payments, you'll have paid $100,000. Okay, 36 payments times 3,000. You'd have paid about $100,000 for 3 years of living in this house. The principal balance of your mortgage will have only gone down about $20,000. So in 3 years, you're going to be underwater. With today's rates, if you buy anything over 400 and it's close, and you're going to be cutting it close for the next 3 years. It's not very appealing to most people to just blow $20,000. I'm sorry, to blow $80,000. Take out a huge debt, throw $80,000, and none of it goes away. So it doesn't. It's if you're renting for less, you're flushing less money down the toilet each month. Okay, so if you do the math, 5% mortgage is not going to get you anywhere in life. Okay, so I'm gonna flip around and I'm explaining the back end of that. The Fed, the interest rates are adjusted by the invisible hand, Adam Smith, whatever. And let's say 6 months ago, last several years, the interest rates have been so low, banks have been lending like crazy. We did get a little bit of a bubble there. You know, interest rates were so low, it was so cheap to get a mortgage. The monthly interest payments were so low. It made a lot of sense to take out a 3% mortgage. So now, with the rates double, a slice of your monthly payment has doubled. That interest portion, it went from $300 a month, or it went from $400 a month to $600 a month, or to $800. Just that little sliver. Taxes are always going to go up. Insurance always going to go up. But the interest should not double. So it's a shock to the system. It's not a big deal, but it's just going to be, the waters have just gotten a little bit churned up. It's a little bit of a shock. It's not a huge deal. I'm actually happy for it. They needed to do something. Things were it was out of control. They're getting like 60 offers every house. It was ridiculous. So 400K mortgage, that's a very, very low mortgage in a lot of places too. So just flip around here. Like 400 isn't gonna get you a ton in LA, or other places. But if you're 30 minutes outside of a city, an hour outside the city, you could do a lot. You could get a lot for 400. You could do a lot for 300 outside the city. So certain cities, certain markets. If you can get a mortgage for the 300s, it might make a little bit more sense. You won't be quote unquote flushing as much money down the toilet on taxes, interest, insurance, mortgage insurance if you need it, versus just renting. It depends on where you need to be. So that's what I would advise the board. And we're just going to ride out that housing bubble. It's definitely going to churn up the markets, and that's what's leading me into my final section here. My plays for the week. The market is still in the tanker. It popped off a bit last week. It was insane. I think we did bottom out. I think the Roe v. Wade bottomed us out. So my plays for the rest of this week, I'm going to flip around if I need to, but let me just get my steps in here. And this ties into why you need to go into Weeble too. So we're buying heavy duty this week. Stocks, Apple and Google. Google's about to split. So as soon as it splits, I'm about to buy like 20 more shares of Google. Maybe 10, because now it's going from a 20 to 1 split. Okay? So keep invested in Google this week as it's dipping. Keep investing in Apple this week as it's dipping. Make sure you pay yourself. This is the important thing. The message of all messages. You gotta pay yourself before you pay the companies. Open up a Weeble account. Pay yourself what you would spend. Just take that, take whatever you're gonna buy and invest that stock in Weeble instead. Just for this couple of weeks. Next couple of weeks. And I think you'll see about a 20% return by January, February, March. I think it's January 23. Once we hit the bottom of the rabbit hole, we'll start to bounce our way back up. But you gotta keep buying. You gotta stay confident. Those blue chip companies that are like 50% down right now that are gonna make it through this storm, there's gonna be a lot of companies that don't make it through. Every time I come on here, I have a whole new list of BK companies. Banks, crypto banks that are pausing withdrawals. Like, companies aren't going to make it through this. So I'm getting a bunch of inbound messages right now. Hop on that Weeble link. Pay yourself first. These next 2 months, it's the great reset. This could be the last time in a long time to get deals like this. So that's it's the final guidance I got for the board today. Bubbles are popping left and right. You gotta keep holding on to your butts. So the market specifically, it went up a little bit last week. It's predicated on the interest rates. So as these interest rates start to level off, it'll be a better bet for big money to get in back into the stock market, better returns in the market. You just gotta see what happens to those interest rates and play off of that. So I can't wait. I think it's gonna pop off again by the end of this week and just show a little bit of life. Because, okay, so what it did last week was it popped off big, and then it was even. It had like a big day. There was one big day last week. So we're out of what we were the last month. I think we bottomed out from like about a month ago. But now is like even more critical time to buy. So you should have been buying all last week, like I've been saying. All the previous couple of weeks been buying. But we can still get in. I'm still getting in. I'm gonna hop down to Weeble. I'm gonna probably put a few thousand on Apple and Google, and maybe I'm gonna look for another blue chip company that's down on itself that I know is gonna make it through. It's just too ubiquitous. It's just too everywhere. Like AMC, everybody's still going to the movies. So I've been playing a little bit on the AMC. One of those big brands that everybody just wants to use no matter what. Target, any one of those. All right, guys, I'm gonna pick up the pace. I'm gonna get out of here. Thank you so much for tuning in, picking up the pace. I'll check in later this week or this weekend. Keep buying, pay yourself first. All right, later, peace.